Hello everyone. I want to welcome you to this discussion today. My name is Martin Rhymes with Hit the Mark Trading, and before I start, I see there's some people still coming into the room, so let me ask just a few questions here, just a quick question. Number one, can you hear me? Can you hear me? If you can hear me, just let me know. Okay, thank you, Paul. Can you see the big screen that says Hit the Mark Trading? Okay, good. All right, wonderful. Well, I think we're going to go ahead and get started here. So, without any further ado, I want to welcome everyone to the Hit the Mark Trading presentation today with AgenaTrader. I really appreciate that AgenaTrader has such a commitment to education. Every time I do these presentations, I'm really interested in giving you something you can immediately work with, not simply a excuse to get up here and sell something. I want you to, I'm speaking trader to trader, where you can take what I discussed today and immediately start testing, and that means a lot. Okay, one of the things I do give away free for 30 days is Rooster Call. Now that's a early morning newsletter, really brief, a client letter I send out to my subscribers, and I basically will spend about an hour and a half, and what I do is look at the charts, look at the overnight news, and just on a really quick read show you what I think is important for traders, what's going on, as well as keep you up to date with the economic reports or events for the day. So if you want to access this, there's one of two ways to do this. You can go to my website, hitthemarktrading.com, and you can go to the contacts page, or I'm going to type this in, martin@hitthemarktrading.com. If you send me an email, then I will register you, and you don't have to do anything except an opt-in will come in, and you simply agree that I can send this to you. So it's totally free for about 30 days, and quite honestly, I'm pretty lax on that 30 days. All right, I think it's good information, and my clients love it. Remember, we're adults here trading financial stocks. Options or futures contracts is extremely risky. Only trade with money you can afford to place at risk. Please do not misconstrue anything as a guarantee. Past results do not guarantee future results. Okay, that's just part of the business. And anything I present to you today, please paper trade to learn the new concepts. Paper trade regardless of your level of expertise, and again, have an understanding that just because I say something's going to work does not mean it's going to work. You must prove it to yourself, and that's very important. Okay, a little history about me. I've been doing this for about 25 plus years, and I launched Hit the Mark Trading as a teaching newsletter in 2008. I moved this to a nightly video format. Now I just do a nightly report, and I throw out videos a couple times during the week where I'm trying to prove a point, or I'm trying to really highlight an opportunity, because what I believe in is I call trades in advance, and I let my clients then follow through and see how the concepts work. I do boot camps about 4 times a year. That's a live event on the internet. I have recordings of these. And I've also done, my latest course is day trading, which is proven the most popular, okay, because it's really deep, in-depth review of what's going on with day trading. So I've got all kind of indicators experience, from the old war horses to all kind of things, including exposure to automated trading strategies. So this is who's talking to you. This is me, and that's outside. That window is my office at the house. Lots of orchids. This is my trading room at the house. The internet is so terrible that I had to rent an office just for internet access. Isn't that horrible? All right, so if you're interested in anything that I've talked about as far as courses or the nightly market update, please check out hitthemarktrading.com. Now, one thing I want you to understand is we look at charts in an all-encompassing point of view: price action, price oscillator, and linkage between markets. So just so you know what my approach is, I also give a peripheral glance to fundamentals, okay? I believe price action reflects everything, but I still want to know, if particularly with commodities, you know, what's going on. You can't trade gold without watching the US dollar. If you're going to trade the grain markets, you better know something about what the supply and demand is, okay? All right, we're talking about position trading. The boot camp is for position traders. Again, I've got recordings available of my recent event, and of course I've got a separate course for day trading. All right, let's get started. So we're talking about trend and momentum here. Trend and momentum. Momentum trading is the art of spotting a market ready to move, selecting a trade, entering the trade with confidence, and utilizing predetermined exit points. Okay. Momentum trading builds off a firm understanding of the support and resistance, along with known areas price is attracted toward moving. Now, momentum trading is trading directionally up or down, riding the price wave rather than reacting to what might happen. Usually this is accompanied by a price oscillator. And momentum trading, the techniques I use and speak about, are used for intraday and short-term trading, holding over a few days or weeks. Today we're talking strictly about position trading. So with position or swing trading, we're going to use the weekly chart for the big picture and use a daily chart for tactical entries. Now, you can use an intraday chart if desired for entry for a trade that you are ready to implement. Now, what does that mean? That means, for example, in the nightly market update, I might say, okay, we've got the setup, start the trade as a day trade, and if the trade proves itself, then you may hold overnight. These are the kind of suggestions that I give. We know that markets move up, down, and sideways. That's 3 directions they move. And if you want to know what sideways is, look at the equity index futures, like the ES, in the year 2004 and 2005 and half of 2006, and that is what a sideways market is, where it is extremely difficult, extremely difficult. So the people who make money in sideways markets are typically option traders trading non-directional trading strategies. Bottom line, if a market is sideways, and we're just greatly challenged unless the range is large. So it is imperative we must find moving markets. Okay? You want futures and stocks or whatever you're trading to be positioned for directional movement. Now I know we've got some Europeans in here. You trade the CFDs. We don't trade those in the US, but the bottom line is you want them positioned for movement. Now, briefly, we're going to talk about bracketing price with trend lines on a weekly and daily chart. And here's the technical concept we understand. The price will simply bang back and forth between the price trend lines. That's it. So here's weekly GLD, for example. GLD is an ETF, exchange traded fund, for gold. So then naturally, if you're trading GLD, you're going to want to watch the gold chart as well. So if we look at this chart, a couple things, let me explain the chart. This is a Agena chart, and you obviously see the price. You've got the CCI histogram, which I'm going to talk about in the first subgraph. Let me see if I can get my drawing tools here. Whoops. Okay. And then we've got down here, these are, I'm not going to go into this too heavy, but you can watch it as I give the demonstration. These are generated signals telling you, for example, here, short me, okay, right here, these two guys. Here, go long. Here. This one said go long, and then immediately said, uh-oh, better go short. Boom. Go short again. Boom. Go long, okay? So there is the ability to have everything I talk about in front of your fingertips as a trading assistant. I don't want to go into it too heavy because I only have a limited time here. Understand, though, that on this program, I'm giving you filters and nuances that are beyond the scope of today's discussion. Okay? All right. Now, let me go back to this. If I look at this weekly chart, I mean, I can draw this trend line, and all it does is it gives me a visual to observe and say, well, for some reason, we keep going up and can't fall down. We go up, we can't seem to make any more headway. So I want to know about that, and I want to draw that. Obviously, I could have drawn a line like this. Let me see if I can get my drawing tool again. You know, I could have had one like this, for example. Oh, just trying to follow this right here. You know, drawing these lines is an art, not a science. It takes practice. Since I can start here and then touch these price bars here, I'll extend that again. When I do this, see, look here, we got all this, extend it out, or wait for this and then draw one and extend it out. What this does to me is it gives me now a landing pad. So this is where I expect GLD is going to end up. Okay. Over to the left, what about this? Okay, I could have drawn a line like this. I don't want to have the charts too busy for you today, but my point is, more often than not, price likes to define a roadmap, you know, and then all we do is we just bang, you know, just bang. So here's a sell signal. Here's a sell signal. All right. Looking at the daily chart, once I've done my analysis on the weekly, I look at the daily chart. And remember where we tested that line on the weekly? Well, here's that spot now on the daily. One of the things this daily chart shows you is that when we are in a sideways market, and that's what this is, okay, highlighted in blue, I'm telling you, we are greatly challenged. It is absolutely the worst thing in the world for novice day traders who just get totally chopped up. Okay, absolutely. I try with this program to eliminate some of that. You can see that this is a fake out, and then we followed by a move up, and yes, we went up, okay? But obviously, we certainly move better. We do better when markets are moving, don't we, right? Here's another one. Notice on this daily chart, again, we just, that phenomenon, up, down, up, down, up, down, up, down. So if you're an options trader, whether you want to buy the shares or you're an options trader, now you know, okay, if I hit that line, chances are it wants to go up. Maybe I should sell puts, buy calls. If I hit the line and it wants to go down, maybe I should sell calls, buy puts. Okay. Again, this is going to have different things in it too. Hopefully, it's going to be a little conservative. But he says at this point, hey, I'm in long. And you stay in there until you get taken out or a reverse signal occurs. Nice. Very nice. Okay. So the bottom line is, I just want to show you on this daily chart, if we were drawing trend lines, I'd probably draw something like this. I'd say, okay, we're just sideways here, so it's going to become meaningful when we break down, right? It'll become, when you see it sideways, it's meaningful when we break up. I could draw a line like this as well. Maybe I want to throw these out and just draw it from here, right? I'm loath to draw a straight line. I don't know why. Okay, but you know what I'm trying to do. There's a sell signal, by the way. And all I'm doing is I just want to know where are these areas that price is respecting. That's it. I mean, I could have had a line up here too. Again, drawing these kind of lines is an art, not a science. So we're sideways in here since September, all the way into the breakout, which happened what, last week on GLD. And this is going to be good for any type of a stock that you want to look at. I could even draw a line like this, okay? And maybe you think it's all hocus pocus, but I derive value out of this, okay? I derive value out of this. I see, okay, my gosh, we've had all this support and we finally broke down. The point I'm trying to make is everyone gets so married to their indicator that they lose sight of what the big picture is really going on. Okay, there's a lesson there. Now, the trend lines, as I just showed you, can help spot trading channels. Got it? Up, down, and sideways. Now, here's a monthly chart. Do monthly charts help? Well, it's a small price to pay. You only have to look at a monthly chart once, 12 times a year. I think they help tremendously. Absolutely. You want to get the bigger picture, you've got to look at the monthly chart. Absolutely. Now understand that support and resistance is huge in momentum trading. And again, we're just learning to identify probable areas price wants to touch over and over again. But let's talk about oscillators, because the guru industry, it's like a cottage industry, right? The gurus have convinced everyone that you must use an oscillator, and especially a proprietary oscillator, right? Well, what we're going to do is use an oscillator. We're going to look at one designed for trend and momentum, which does not cost anything. It's in your chart package. Very, very, very basic oscillator. What I believe is that if you have screen time behind you and you know how to read the price charts, that the oscillator provides a trigger point for entry for something that you intuitively feel should work. Now here's what most traders look like when trying to figure out which oscillator to use, okay? So, I mean, you know, just study this chart a minute, you know? The story is about 6 blind men that felt different parts of an elephant, and each one describes something different. Well, I'm using this to say, okay, well, the first guy says, well, MACD, that's, well, that all I need is MACD. This is MACD is going to be the best one. Maybe the next one says, oh, RSI. Maybe the next one says, no, I like the Williams percent R, and that's what I feel is the best. Someone else says, no, Bollinger Bands tell you all you need to know. And here's the guy that says, well, I just spent a fortune for an expensive proprietary system, and I know that I feel it's the best. And then you got the guy back in the back says, well, you know, you can't beat slow stochastics. That's a war horse. It's been around forever. Bottom line is all of these different methods, just as examples, and there are hundreds of oscillators. All of these different methods are used to describe the best approach to the market. Okay? Just understand that. In the beginning, for position trading, I used slow stochastics, MACD, Williams percent R, and RSI. I probably had the Bollinger Bands as well. And at present, I use one indicator because after years and years, I just want to simplify. So I use the commodity channel index. Now here's a secret that no one wants you to know about. In a strong momentum market, all price oscillators work, and I mean everything. Everything works. Even whether you have a free oscillator or you've bought the most expensive oscillator, everything works. In a tight range market, all price oscillators lose their predictive value, all of them. Okay? If we can agree on that, then we all raise our level of consciousness and maturity about oscillators. So it's one more reason that we should monitor several markets looking for momentum so that whatever we're using has a better chance of working. Now, what is the CCI? It's a commodity channel index. It's a price oscillator created by Mr. Donald Lambert. I've met with Mr. Lambert. I've talked with him. In a moving market, the CCI is shown to lead price. Wow, big statement. Don't take my word for it. Remember, your job is to hear what I'm saying, but you must perform your work. So you can check out John Murphy's take in his book, Technical Analysis of the Financial Markets. This book, by the way, is required reading for anyone that wants to be a chartered market technician. And all I want to do is let you focus on this last little bit here. Notice that the CCI turns before prices at each top and bottom. That's in print. Now, in this book, he only spends about a half a paragraph talking about CCI. So don't rush out and get the book. But let's see what he's talking about. He's saying, okay, well, the CCI is turning here, and my gosh, price going down. CCI turning up here, my gosh, price goes up. Turning here, my gosh, price goes up. Now, what about this? CCI turning down, but the price keeps going up. How do you explain that? Well, it's momentum, right? Whatever gets you into a trade early telling you to sell, or gets you into trade early telling you to buy, in a very strong market, it's like throwing a ball in the air. The price is going to keep going up, 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 until it reaches a certain point. Maybe that's it right here where I'm drawing. And then it starts to come down. The CCI is trying to give you a heads up to what might occur. So, all you need to know about the CCI is that we're comparing price with a simple moving average over a selected time span. Mr. Lambert suggested a 20-day period. How do you calculate this? Well, thankfully most software platforms have this task automated. All you do is just define the time period. I'll show you the calculation because I know there are engineering types, people who must see a calculation. You can freeze this if you watch the recording and study this. I consider myself a visual trader. So I'm going to show you a histogram and how to read it. The CCI is plotted on a histogram. The zero line represents major support and resistance. 100 and 150 lines represent minor support and resistance. So let's just look at this. Get my little bouncing ball here. Okay, here's the zero line, right in the middle, zero line. Okay? Now what we say on CCI is if you print 5 to 6 bars above the zero line, then you are in a CCI upward bias. We expect price is going to rise. If you print below 5 to 6 bars below the zero line, then we have a downward bias on the CCI. We expect price will go lower. Okay? Now, notice in this template that I've got it color-coded. So it's red when you're below the zero line, and then you get these gray bars. Suddenly a yellow bar flashes up here to tell you, hang on now, we're about to become upward bias according to the CCI. We're over here. CCI crosses zero line, and you got these 4 or 5 bars of gray action, and then a yellow bar appears saying, hello, 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 hello. We are getting a bias for the downside. Okay? And down price goes. Now, just so you know, I see this, just a minute. I see this looks like it corresponds with this, but that's just a coincidence because I've got several things that make up the signal, about 16 decision points. Okay. What about the person who is just simply following the channel line, which I opened the discussion with? Sees that price is falling back into the channel. That person is probably, if he takes a short, ahead of anybody. Nice. There are also other things we look at, and one of those is the diagonal trend line break, which would have allowed the person to get in around this area. Okay? Well, then let's talk about that diagonal trend line break. I lived in Asia for about 5 years, and I loved the term auspicious because auspicious describes something really unique. Powerful. And that's the way I feel about the diagonal trend line break. So the rule here is to start drawing on the CCI histogram from the plus or the minus 150 line. And you wait for that line to break. It's an extremely beyond simple concept. It's a wonderful tool. And because of its simplicity, people probably dismiss it. Let's just talk about it. Here's that daily chart again now. And here's our zero line. Here's minor support and resistance, right? Minor support and resistance. And I failed to mention 200 we call extremes. We don't see CCI hang out below minus 200 that often. So here it again. Minor support and resistance. In other words, breaking through, we're gaining strength. Minor support and resistance and extremes. So I'm going to draw a line here. So first off, to the left, I can just draw a line here. There's 1 and there's 2. Okay, so that almost corresponds, or it seems like it corresponds with our buy signal. Notice I'm waiting for at least 150. Now, you can certainly draw some of these diagonal trend lines below below the 150 line. All I'm saying is that when you are at least at 150, my work has shown that the probability of the follow-through is greater. Got that? It's greater. Some people say, no, no, no. I'm happy if I draw it from the 100 line. Okay, that's your business. That's fine. I'm showing you the concepts that I use. Here's one we could draw like this too, from 150. Now, it's really good if you can touch, because now the CCI looks like it came up, hit the line, and fell back. So then the buy is right here, right? Oh, somewhere like up here, if I can draw a straight line. I can't draw a straight line, but you get the drift. Here's a diagonal trend line break saying go long, right here, right? And don't worry, I've got it with lines to show you the exact entry. But this just gives you an idea of an extremely simple methodology. And if you're a visual trader like me, you're not going to depend on volume, you're not going to depend on anything else, because you know that using trend and momentum, it is implied. All right? Just like if I'm going to be an option trader, I don't need to worry about implied volatility. The volatility is implied. In other words, if you trade options, you'll know what I'm talking about. They always say sell volatility. That means, sell when price is high. Or they'll say, if volatility is low, you need to buy it. Well, okay. Here's where we would sell volatility. That just means go short. Well, we got the signal right here, okay? All of that's implied in the model, contingent upon one thing. We must have momentum. We must have momentum. Now look at this. This is horrible, okay? That's horrible. Absolutely, because by the time you get in, it goes against you. You must let price resolve that. I wish it were different, but it's not. So whoever over here on GLD, whoever sold gold managed to make some money, or sold the calls in GLD, okay? But then we just went flat. It's tough. Very tough. Okay, so let's just look at this. Diagonal trendline break here says sell. So what happened? Well, I can't draw a straight line. What happened is simple. You're locked in a sideways market. There's nothing you can do. You've got to wait. What about this? Why didn't I draw a line? Well, it didn't hit 150. Right? I could have drawn a line. Could have drawn a line looking for something like that. That would say buy at this area right here. Well, I'm in a sideways channel. Wouldn't it be better to recognize the sideways channel and then just wait? And if you're in a trade, if you take a loss or something, then you just simply wait and say, gosh, what's going on here? I'm not moving. Maybe I should look for something else to trade. If this is GLD, maybe I want to look at SPY. Maybe I want to look at Apple. Maybe I want to look at Google. Maybe I want to look at crude. Maybe I want to look at soybeans, right? If you're a futures trader. All right, let me see. There's a question here. Let me see if I can open this up. I have the darndest time with I can see the CCI drew drawing a line, but somehow can't understand the rules to draw it. Okay, well, I'm going to go through this. I get that a lot. Don't worry. You're not alone. I get that a lot. When I'm drawing this CCI line, let's take a look at this one. I'm going from minus 150, and I'm just, if I can, I prefer where there's a touch. So that's 1, that's 2. So now I can draw that line and extend it. So it says sell when we break the line. There are moments, though, when you don't get a bump. This is the bump. Hello. There's the bump. So then you simply have to run it completely, like right here, straight down. And what this tells you is you probably have a strong upward momentum when you have a just going straight down. So sometimes we have to do that. I mean, here we got 1 bump. I'd consider that 2 bumps, even though we didn't really touch, and then buy. And then here's our buy signal. Now, you got a buy signal, and I'm telling you, look at the price action. You got a buy signal, but look at the price action. So I would venture to guess the volume was pretty low, but yet we took the trade. Why? Because we are working with trend and momentum, and we got a signal. Okay? Volume is not what it used to be prior to the 2009 or the 2008 crisis. The entire rise from 2009, March 2009, which we called on our signals, that entire rise was accomplished with low volume. The rules of volume have been completely rewritten. Obviously, it's great to have volume, but the whole rally has occurred on lighter volume. So I don't want to start an argument, but let's just say I've seen the light, and I love volume, but it doesn't. It's an afterthought for me. Okay, I'm looking at trend and momentum. All right, let's move on. So here now, what I've done is I've reduced the size of the CCI panel. I've expanded the size of the price action. So I'm now showing you over to the left. Let me get my, if I can get my bouncing ball here. Okay. Whoops. Here's the diagonal trend line break. He says go short, and it just happened to be right where the signal is, and boom, price falls. Now, where do you put your protective stop? That's always a big question, right? I firmly believe that the easiest thing you can do, entries are the easiest thing to do. The hardest part for me is the exit, and that includes having a trailing stop exit. So in my desire to simplify, I make it real simple after years of testing, and I like to put that stop just above whoever's higher, the trigger bar or the bar higher. And that's it. No agonizing. All right, here's diagonal trend line break, the second one. It says go short. Well, okay, so stop is right there. Down we go, boom. Sell GLD or buy puts or sell calls and buy puts. Okay, now here's one I did not draw. Let's draw it right here. Now, we got our below 150, check. Did we have a bounce? I mean a bump? Yep. Had another one? Yep. So that means sell on the break. Well, that's probably about right here. Sell after that red bar. Well, guess what? The next day it worked, and then it just completely reversed. Wouldn't it be great if you had 100% trading methodology? That's unrealistic. So you're not going to have 100% at all. Not possible. Maybe if you use extremely teeny tiny profit objective, but still, even with that, I don't think it's possible. I've been doing this for a while. All the greats have losses. Losses are not some kind of a I'm trying to say losses can be your best friend. They're not something that should make you feel bad. Then if you feel bad, then you have not matured into this game. Because just like planning a picnic and it rains, guess what? That's life. But if you plan picnic after picnic after picnic after picnic, it's not going to rain every day, is it? And you're going to really enjoy yourself. Trading, same thing. Every single successful trader has drawdown. Every single one. Just understand that. So a loss is simply the price of admission to this business. Your job is to find something that is repeatable, something that occurs time and time again with great regularity, something robust, with an understanding there will be losses. And that's it. Okay, next time we get a signal here, what's going on here? Well, here's one says, no, go long here. That's the red line. Okay, well, if I adhere to my stop rules, the bar previous to the trigger is here. That's where the stop is. And guess what? This is called the ride to victory, right? And suddenly, that loss that you agonized over right here, that you said you were, oh, you can't do this, and oh, they got me, oh my God. Suddenly now you're on top of the moon, right? This is why emotions are so dangerous. This is simple, just business. Simple trend and momentum to the best of your ability. And that's what we do. Okay, we suddenly have another buy signal right here. Okay, right here. Where's my stop? If I want to add to my, I'm already long, where's my stop? If I want to add on to this, well, you can put your stop here. Just below whoever's lower, the previous or the trigger. And you're not stopped out. This was where they try to get you. Who's they? Big hands. You're okay. Here's I don't have this marked. That's funny. Diagonal trend line break, so that means it'd probably be entry on this guy right here, this one. This one, right? Oh, let's see if I can get a straight line now. Oh, come on. I think it's that one. Okay. Where's the stop? Who's lower? Put the stop in, and guess what? Price goes up. Now suddenly, after seeing this kind of an action, this loss over here, right? It's like being thrown from a horse. You're gonna quit riding a horse because you got thrown one time? Or are you gonna get back on the saddle? Trend and momentum, trend and momentum. CCI bias is above the zero line. The bias on CCI says, stay with me. We're feeling good here. Up is the operative word. Okay? Excellent questions. Okay, now we got diagonal trend line break here. Okay, my gosh, if I look at the channel line, I'm rejecting that, and now I got a sell signal here. And here's another sell signal right here. I don't have it marked, sorry. Something like that. Here's another sell signal here. Where's that stop? Right here. Nice. Here's one here. Got a little bit out of that. Now there are ways to identify when we are going to move back up. It's beyond the scope of this presentation, where I'm simply trying to reinforce the diagonal trend line break. Can't do everything in 1 hour. But I hope to have shared with you a very important, very easy method. You can immediately start testing. You're going to say, wow, this stuff works. Obviously, this is a problem. Obviously. Well, remember that earlier loss? You might have a loss over here. Okay, good. Let me move on. This is a great pattern for trading. Diagonal trend line break on the CCI. Now there are 4 other CCI patterns I use and teach, along with other robust setups, filters, and nuances. I'd say 50% of the trades are accomplished with the diagonal trend line break. So you've immediately got something that you can test. Free and good. Remember, draw the line started at plus or minus 150. Better trades are in markets showing momentum. And we use the 20 CCI, the default, for our position or swing trading. Okay, so diagonal trend line break with the trend for new people who've never used CCI. Draw from the plus or minus 150 line. Use confirmation price bar close unless the trend is super strong. What does that mean? Well, that means once you get your signal, say go long, if you want to, let price prove it one more day. That's up to you. At least you want to take out the high of that price bar that gave you the signal. Counter trend trades only after you have mastered trend trading. There is a reason they say the trend is your friend. There's a reason for that. It's like the law of the jungle. I talked about protective stop rules. If you're going to go long, place your stop below the trigger price bar or the bar prior to the trigger, whoever's lower, and just have a little confidence in that. You can look at thousands of charts, and I'll tell you, this is a great protective stop. And I'm saying initially, you can always move it up. So if it looks like, well, my gosh, I got a big protective stop here. Do I want to take that trade or not? I'm just saying that is your initial stop. You can always move it if the trade starts moving in your direction. Those of us who trade options I do futures, and I also do some options. You find your cheap but good trades with option trading. If you're going to go short, place a stop above the trigger price or the bar prior to that trigger price bar. Okay? I'm telling you, this one rule right here, this one rule is worth the tiny little hour that you've invested with me this afternoon. This is a big deal. You don't even realize it, a lot of you. It is a big deal, a huge, huge, huge help for you. Okay, I'm here to help. Now, there's all kind of profit considerations. I've mentioned before, entries are easy. Exits are the most difficult because of your mind, because of ego, because of fear, because of account size. Super small accounts, I believe, should take profits early and often. Pay the light bill. Don't worry about trying to buy the house. Pay the light bill. So on profit targets, you simply decide the target. Now, if you want to use CCI, if you see that the CCI has been above the 150 line and it crosses back towards 0 line, that's your first indication. Hey, be aware. We're losing some momentum here. If the CCI crosses the 100 line, that's probably a good time to get out. Or if you were long and price touched a top channel trend line, you know, why not take the money? You can always get back in. So this is a very, very powerful, simple system. And I've told you before, do I really need to worry about volume? No. And I know all the textbooks say volume, volume, volume. Check the date when those were written. Okay? This is not your daddy's market anymore, or your granddaddy's. You can buy or sell stocks or futures or use options for greater leverage. Now, what I've talked about today and everything I use works across any instrument, including Forex, okay? Across any chart time frame. If an action repeats, we can trade it. That's my whole, everything that I do, it's like, okay, are we repeating this? Does it repeat? If it repeats, we can trade it. Okay, so yes, I've got other CCI patterns and filters. Yes, there are nuances, but you've got enough for immediate testing. And if you do want to learn more, the boot camp is total immersion. Just want to throw that out there. HitTheMarkTrading.com. And I will say, if you are a day trader, then the day trading goes even deeper, because now you are fighting the machines. And I have an entire lecture on just how that works and why it works. And we can anticipate, because thankfully there are rules to the game. And if we just ignore the rules and say, no, I want to wait until 5 of my indicators all say go. Well, great. I'll see you on the side of the road, because we're going to be driving with the people who are responsible for the volume. So that's called just day trade. Now, everything you've seen with those buy and sell signals, this is an add-on for AgenaTrader called the Rhymes Range Bar Sniper, and it basically calls trades. So regardless of the time frame, regardless of the instrument, it's a trading assistant. It is suggesting trade setups. You are the trader in command. Now there's people that say, well, I like to look at a 4-hour chart, an hour chart, a half-hour chart, and a 15-minute chart. Great. You can get signals on all those. Personally, for day trading, I use a 10 range bar chart for a lot of the instruments. Okay? I like activity-based charts than, say, looking at a 5-minute or a 3-minute. That's the whole key about being robust. Now, I'm going to thank you for your patience. I want to thank AgenaTrader. I'm ready to take any questions if you have any questions. If you're interested in this rooster call, and I mean, it's just my thinking, sometimes it's a little cynical. If you're interested in that, either write me a note, martin@hitthemarktrading.com, or go to the website, to the contacts page, and sign up for it. Okay, it's take you about 1 minute, 2 minutes to read it, and It's just a trader's point of view, digesting briefly in the morning what I think is going on. Okay, are there any further questions? Let me see if there's any further questions. Can you look at the chart of Google weekly chart? Okay, yes. Wait. Do you use automation? I'm going to get that Google chart while I read these others. Do you use automation for these trades? Hey, Michael, it's good to see you again. When this AgenaTrader is calling the trades, it can be automated. I use it as semi-automated. In other words, the signal flashes and then I make the decision if I am going to take the trade or not. Hey Manny, good to see you. CCI periods for all charts is 14. No. We're going to use 14 for any period below 60 minutes. Otherwise, we're going to go with what Mr. Lambert suggested, 20. But if it's below 60 minutes, or if it is an activity-based time bar, then we're going to use 14. Okay? We're going to use 14. Let me see if I can get that. I just pulled up the Google chart here. There it is. Now this is a weekly chart, so if there's anybody who knows anything about trading options, again, the weekly chart. So we got, what's going on here? Non-directional trading. This is like January through April. No, I'm sorry, January through June. What's non-directional trading? That's where you bet that it's not going to go higher than this, and you bet that it's not going to go lower than this. This big bar was probably something to do with earnings, if I had to guess. Here's some buy signals here. Let me get my arrow. So what do? Sell puts, buy calls. Sell puts, buy calls. Wait a minute. What's this guy saying? Sell. Well, that one didn't work out, did it? What about this? Buy. How am I going to afford $1,000 stock, 100 shares of that? Well, forget it. Use options. Use options. And there's ways you can cut the price on an option, absolutely. Sell puts, use the proceeds to subsidize the calls. Want to make it cheaper? Use a call spread. Lots of ways to skin a cat. All right, let's see. Any other questions? Let me see. Any other questions? I have to look at something called chat, and I got to look at something called questions. Are these arrows from Agena? Yes, they show up on the chart. They show up on the chart. When the conditions are met, there's about 16 conditions. So what that tells you is the computer's waiting for these different conditions to, according to what I use. So maybe it's not going to get exactly the bottom, or exactly the top. But it's going to be catching quite a few good ones. Okay. All right. Any other questions, or is there another instrument you'd like me to look at? I'll look at it. Let me see this real quick. Sure, Michael, drop me an email. Okay, remember my email is, I'm going to type it here in the chat, Martin at hitthemarktrading.com for a rooster call. Just to ask, or questions you might have. If you want to know more about the day trading, I do just for people who go to the day trading course only. I have a trading room just to prove the concepts out in front of people real time. And I make, I restrict it to just people that have gone through the course, because you get others that will come in there and say, well, can you change that from blue to red? Can you change that color? Or can you do this or that? Or, and I want people that are serious about understanding what we're doing here. Okay, I don't mean any offense by that. Okay, I appreciate everyone being here. And if you have any further questions, just drop me a line. And without any further ado, I will talk to you later. Thank you now. Bye-bye now.